Minimalist money management means making your financial life simple. It does not mean being cheap, refusing to enjoy life, or never buying anything. It means spending money on what truly matters and cutting out things that add little value. The goal is not to have the most money in the room. The goal is to have enough control over your money that it does not control you. The first rule is to spend less than you earn. This sounds obvious, but many people ignore it. If you earn $2,000 a month and spend $2,100, you have a problem even if your income looks good. A simple financial life starts by making sure your expenses stay below your income. The second rule is to know where your money goes. You do not need a complicated spreadsheet. You need to understand your main expenses, such as housing, food, transport, debt, entertainment, and savings. Money that disappears without you knowing where it went is money you cannot control. The third rule is to avoid buying things just because you can afford them. Having money in your account does not mean you should spend it. A person can earn more money and still remain broke because every increase in income becomes an excuse to increase spending. This is called lifestyle inflation. Minimalist money management asks a simple question before a purchase: do I actually need this, or do I simply want it right now? The fourth rule is to keep your fixed expenses under control. Rent, car payments, loans, subscriptions, and other regular bills can quietly trap you. Once these costs become too high, your income has very little freedom. Keeping fixed expenses reasonable gives you room to save, invest, handle emergencies, and enjoy your money without constant stress. The fifth rule is to build an emergency fund. Unexpected costs are part of life. Your car can break down, your income can fall, or an important bill can appear at the worst possible time. Without savings, you may be forced to use expensive debt. An emergency fund gives you a financial cushion. The sixth rule is to be careful with debt. Debt is not automatically evil, but careless debt can become a serious burden. Borrowing money to buy things that quickly lose value can leave you paying for something long after you stop enjoying it. Before taking on debt, understand how much you will repay, not just the monthly payment. The seventh rule is to automate good financial habits. If you wait until the end of the month to save whatever is left, there may be nothing left. Saving money automatically after receiving your income makes saving a normal part of your financial life. The eighth rule is to avoid unnecessary subscriptions and small repeated expenses. A single small payment may not look dangerous, but several of them can quietly consume hundreds of dollars each year. Cancel services you rarely use. The ninth rule is to buy fewer things but make better choices. Cheap items are not always cheaper when they need to be replaced repeatedly. Buy what you need, use it properly, and avoid collecting things simply because they are on sale. The final rule is to define what enough means for you. Without a limit, there is always something newer, bigger, faster, or more expensive to want. Minimalist money management is really about deciding what is enough and refusing to let every new desire become a financial obligation. Money should support your life, not become your entire life. A simple financial system works because it reduces unnecessary decisions, unnecessary spending, and unnecessary stress.